What's up, traders? How you doing today? I wanted to show you this trade real quick that I did this morning on ARRY. It was a short play. I'm going to go through my reasoning why I took it short, and then I'm going to show you the trade. All right, let's get to it. So here was my tweet about it. The great AJ Trader 7 also called this out. I was short pre-market, and then he called it out, so put it on his list, which gave me a lot more confidence. You can see here, this is at market open. It declines. Yeah. Let me show you what I saw. So Goldman Sachs downgraded their earnings call. Their earnings call was not good. Let me, dang it. Where did it go? Where did it go? No. Well, you can see the downgrades. It's because after hours yesterday, they put out their earnings. Guess we could just look at this 10Q, go through it. That's kind of boring though. Oh, that's the transcript from the call. So they had a call. They didn't give good guidance or any guidance, or maybe inline guidance, but it was definitely not upside guidance. And then the downgrades. Just their numbers were not good. Oh, and their gross margins decreased because of the rapid increase in commodity and freight prices that's going on right now. I guess that's crushing them and eating into their profits. Yeah, so they just got massively crushed. Okay, let's go here. Let me show you the chart first. Here's what the chart looks like. You can see it's still getting crushed. Wow, it's at 13. Oh man, why did I cover? I covered right here. I mean, I didn't know it was gonna do all that. I did think it was gonna hit 15, and AJ had a 15 target. So here was when they put out the earnings report. It wasn't good. And then downgrades. It capped down. Here's where I saw it in the morning, going through my feeds and my scanners, and I think I went short somewhere over here. And I was looking for maybe a pop at open, and I was going to scale in huge. I was going to scale in with size. But what actually happened, it kind of did pop up a little bit, but it never really did. Then it just sold off, and I covered over here at like 1650 for $795 profit, 1,000 shares. So let me show you what it looked like. So here's, let me make it go faster. Let me make sure the audio is not messing me up. Okay. So here's the open. You can see it's kind of pushing up from its low here at 17.3. Here's where I scaled in, like quarter size. I scaled in like quarter size. I thought it was going to pop at the open, and then I was going to, I thought it was going to pop maybe to 19 20. And then I was going to scale in when I saw topping huge, or with size, 4 or 5,000 shares. So here's you can see it getting heavy. And then right here, you can see a big seller come in. This is where I kind of knew that it was going to sell off and not going to pop. Come on, you can see it almost looks like it's not moving. It's not moving, but it's not frozen. It's not moving. The stock isn't moving. It's still playing. Okay. So it's so heavy that it's not moving. It tries for 1 second, you'll see. And then it just, boom, cracks. Right there, it tries. And then now it just, boom, cracks right there. That's when I was like, oh man, we're probably going to get a sell-off. It could still, especially if the market's strong, and it actually does come back to, where it was right about here at 18.4. See right there, it pops a little bit, but it doesn't have it. And then it just continues down. I should open my active trader here in a second. You can just see it. That's a definite downtrend. So I'm up 400 right here. I'm just playing the move. I'm just waiting for it to for shorts to cover and for consolidation to happen. I didn't want to hold through consolidation because I thought if the market took off, then this could possibly be oversold and could pop real hard on me and squeeze me out. But here you can see they're just it's just breaking down. Here shorts come in and cover a little bit, but not even that much. It doesn't even affect it that much because new shorts are coming in. It's just, see, it just cracks again. So I'm actually up more here than I actually got. So I should have just covered here. I should have bought into this weakness. See, the weakness is just heavy and weak. I should have covered into that. See right there, it's so weak right here. And then I'll show you, see, I'm up 1,000. I should have covered right there. We get this big volume spike right here, 400,000 shares. That's a massive cover right there. So now I saw that it was gonna probably consolidate right here at 16. And so I wanted out. But I think I got a little greedy. I was waiting for a little bit more. And I should have just gotten out right there. And I didn't. And so that is what I learned from this trade. Dang, I hate seeing that money. It gave like $300 back. So annoying. So what did I learn from this trade? First, cover into the weakness. If you see other people start covering, you're kind of already too late. It's going to pop and then consolidate probably. So cover into the weakness. I got the idea right. The bad earnings, the high cost of transportation and commodities, and then the downgrades, a bunch of downgrades. So that's when I was like, well, this is probably going to be a good short play. It might pop at the open, especially if the market was popping. Because it was down yesterday. I thought it might pop at the open. I think it maybe did, but this stock just sold off. And so I didn't get to scale in like big, but that's all right. I'll take it. I'm not mad at $800. So hope you enjoyed that and learned something. And I will see you in the next video. Hit that like button and subscribe. And as always, happy trading.